I have got a tissue box handy for all of the investors out there with Elon derangement syndrome, or EDS. We've also got a tissue box for anybody that was short Tesla shares going into the Q1 print. We've also got a tissue box for about half of Wall Street that has to rely on what they learned in Finance 101 about metrics and PE ratios and all that stuff. All of those people are going to be out of a job in a year because AI can analyze stocks in that manner. Because as we go through Tesla's Q1 earnings on today's video, we'll go through the earnings. We'll look at the conference call, just sat through that. We'll look at all of the numbers that everybody is dissecting. And by all measures, Tesla's quarter was an absolute disaster. But in the after hours, after putting up a gain of 4.6% during the regular trade, I am seeing in the after hours, who knows how these things follow through into the next trading day, but currently shares are up 5%. This on the heels of Tesla being up 60% over the past year, but more recently, year to date, shares down 43%. So many people out there with an IQ just above a positive level can tell you that a lot of the bad news that was reported by Tesla in the after hours was absolutely priced into the stock. In fact, might have been too much priced into the stock because shares, like I said, are reacting positively to these Q1 numbers, which saw negative year-over-year revenue growth of $19.34 billion. That missed expectations. They missed it on the earnings side. I'll get into all of that. The company also pulling their full year guidance, basically saying with these tariffs and all this stuff happening, we don't know what's going to happen. So basically, Wall Street has this one pegged at basically no growth until you get to about the third quarter of this year, the back half. Now, you move into next year, this is when the analysts will start to earn their money because there's some analysts on Wall Street expecting 20%, mid-teens growth for the company next year. We'll talk about the Cybercab or the Robotaxi rollout into next year. The company is saying that they could potentially have millions of these vehicles on the road by next year. Well, that probably would bolt on a couple of bucks in terms of revenue. So that's where potentially some growth is going to happen. You also have the disastrous quarters that you're going to be lapping into next year. And so if the company doesn't completely continue to fall on its face, well, positive growth could come. Now, let's summarize the conference call because as it relates to Tesla, when you look at the traditional valuation metrics that a lot of the quantitative people want to look at, it doesn't make any sense. From a price to earnings, price to sales, price to anything perspective, Tesla has never made sense from a valuation standpoint. And so if you rely on those metrics, I'm here again to emphasize that you will have no position in Wall Street in the next year because AI can take a look at a PE and give me an answer. You have to analyze things a little bit more like a human using your brain. Elon started the conference call off saying, look, there's never a dull moment. He blaming the attacks on Tesla facilities and the cars on people that benefit from the waste and fraud that he's exposing over at Doge. And he says that the attacks are, quote, organized and paid for. Starting in May, just a month from now, he's saying that his time at Doge will diminish a little bit as the organization inside of Washington has, more or less been set up, and he will continue to spend 1 to 2 days per week as long as President Trump would like. So that seems like a pretty firm commitment out until maybe the rest of his presidency. Elon saying that Tesla has been through many near-death experiences and saying this is not even close, highlighting some of the past events that the company has been through. Tesla shifting its focus a little bit, and many investors, especially bearish investors, will point holes at this. Elon saying that the future of the company relies on autonomous cars and robots. This is different than the mission of the company, which tends to be around sustainable energy and sustainability. That it appears to be off the table a little bit. Now, new initiatives won't move the needle financially until the middle or the end of next year. So again, the bears will emphasize that Elon is moving the goalpost, is moving things out into the future. But that's what a great executive does, guys. That's what great executives do. They move the goalposts and they shift your focus. And it's your job to either believe him or don't. And if a lot of the market does believe him, well, the stock will move higher. And there's really nothing you can do about it. Elon on tariffs said that they're going to be tough on the company and the margins, particularly when the margins of the automobile business, which we'll get to here in a minute, they are really, really low and it's a disaster. But Tesla's likely in better shape than most of its competitor. The team will continue to focus on bringing robo-taxis to Austin in June. Robo-taxis are the Model Y vehicles, or the current vehicles. The Cybercab is that newer model that likely won't be in production until later this year. Once they make a few cities work as it relates to the robo-taxis, it could be rolled out to any jurisdiction where it's legally allowed. And given the fact that they will be using existing Model Ys, maybe Model 3 vehicles, it could scale relatively quickly if things go well. Thousands of these Optimus robots will be doing work in Tesla factories later this year. That's essentially a reiteration by Elon on that. He's confident on getting 1 million Optimus units per year in 5 years, possibly 4. To give you some context, the company, I think, delivers about 1 million of its Model Y vehicles in a year, so he's predicting similar type of production numbers. You can double the energy output of an existing power plant by using batteries. That's as it relates to the Megapack business, which we'll go through on the financials here in a moment. Still looking pretty good. I would say it was kind of a disappointment, at least from a growth perspective, quarter over quarter, but year over year, still seeing really strong growth in that energy and storage business. Obviously, large utilities probably seeing some benefit there. Q1s are usually the worst part of the year for car automobile sales, as weather tends to slow down unit sales as you have snow and those types of things. The Q&A session began, and fittingly enough, shares were up about 4.2%, 420% in the after hours. Tariffs will have a bigger impact on the Megapack business as those batteries are imported from China. The autonomous cars will be launched in Austin, Texas in June of this year, and they'll be existing Model Y vehicles. And the company is, or Elon's projecting, millions of Tesla will be operating autonomously by next year. I mean, millions is tough because the company, I think off the top of my head, has only made 4 or 5 million vehicles in its entire history. And so millions of Tesla. He's projecting a vast majority of the ones that have already been built to actually be operating autonomously in this robo-taxi fleet. That's obviously been the vision for Tesla from day one, that if you own a Tesla, you can put it out into this fleet and it would start, going and doing drives and essentially, I would assume, earning you some money. The Cybercab, those builds come later this year. This is that car that they've shown up with the flip-up doors, no steering wheel, those types of things. Production won't be until next year on that one. That's probably good news for the robo-taxi rollout. If they were relying exclusively on this new Cybercab, God only knows when they'd actually get that done. But since they're relying on existing vehicles, probably could roll out really quickly. Many questions about full self-driving unsupervised. If you're not familiar with how Teslas work, they have this full self-driving software inside of most cars. You subscribe to it for $99 per month, essentially, and it supervises you. So there's a camera in the car making sure you're not on your phone or you're looking in the back seat or you're eating or whatever. An unsupervised version of that essentially would allow you to fall asleep, if you will, and the car would continue to drive. Elon Musk constantly pushing out the timeline of that, saying the end of this year. I think he said that for the past several years. Now, more affordable versions, lots of questions as it relates to that. The ramp is a little bit slower than the company hoped, but later this year, there's a question later on as it relates to this that'll be very interesting. You want to stick around for that. Does Tesla see the robo-taxi market as a winner-take-most market? They took shots at Waymo, which has the most autonomous vehicles doing actual rides today, saying that those cars cost way more money because they have all these sensors and all these cameras. Tesla saying that their cars are cheaper and they're already made in high volume. Questions about the Tesla brand damage as it relates to Elon Musk and politics. There was a record number of test drives in Q1. Macro demand for cars isn't great right now. If cars, and this is my take, if cars were selling like hotcakes and Ford and Mercedes and GM were just absolutely crushing it right now and Tesla wasn't, it would be a huge, like shares would probably be in the $100 range. But yeah, the automobile business for basically all car makers is disastrous right now. The Optimus ramp, the robot, again, they're targeting later this year for thousands of them or 1,000 of them working in the factory. To give you a sense of the robotaxi launch in Austin, we're only talking 10 to 20 vehicles to begin with. So there's going to be a lot of media attention and press and influencers pumping this and hyping it. We're literally talking about 10 or 20 vehicles Austin is not a town. It's not really like a small town, but compared to where I live out here in California, Austin is not that big of a metropolitan. We're talking about 10 or 20 cars to begin with. So for a company that's worth $700 billion, this is basically nothing, but obviously they're anticipating scaling this rather quickly. Now, every couple of weeks, Tesla might relax some of the attention monitoring requirements on full self-driving. This is for existing car owners that have the full self-driving software. And again, I use it a lot. I use it weekly. There's kind of a longer drive that I do every week with my kids. And just have the software running. But if you divert your attention a little bit, you're looking out the window, the car will prompt you to look. They say that they'll likely relax that as you go forward, and that will actually make the software a little bit more palatable for most people. Is the new model that they're talking about a cheaper model? Is it just going to be a stripped down Model 3 or Model Y? Company was very vague in the way they answered it, but I think they basically told you. They said they will use their existing factory lines to make new cars. What that's telling you is if they were going to make a whole new model with a new body kit and everything, they would have to have a whole new factory line, and they'd have to be designing that, and that have to be scaled up. That's not happening. This is going to be a stripped down Model Y. We saw this with the Cybertruck. A new model came out within the last week or so with fabric seats and a soft cover in the back. It's a stripped down model that I think was maybe $10,000 or $15,000 cheaper than the middle version of the car. The same thing is going to happen here. They're going to put fabric seats in a Model Y. They're going to take out the TV screen in the back. Instead of 4 motors, you'll get 2. It'll have lower range, lower power. It'll have less amenities on the inside, although Teslas are stripped down, if you will, from an interior perspective. So there's not much they can actually strip down, but I would not be anticipating some new model. It's just going to be a stripped down version of an existing car with cheaper components inside, particularly as it relates to the interior, less motors, and that's going to take some price out of the car, and they're going to be able to sell it for a lower price. That is what's coming for Tesla. Now, let's move over to the financials. These are an absolute disaster. 20% year-over-year decline on your automobile revenues. It's offset by the fact that the energy and storage business is up 67%. Your operating margins slipping to just 9%. So we've got single-digit operating margins. Income from operations just fractionally profitable at this point. In fact, you're functionally break even over at Tesla. It's not good financially. Model 3, Model Y production, those are the key vehicles. That was down 16% year over year, although they emphasized numerous times on the conference call, not only is it a bad quarter as it relates to selling, the entire automobile business basically sucks right now. They also changed the Model Y. So they basically came out with a new model or a refreshed body style of the model, and that delayed and kind of limited some of the production and sales that they can have. But my guess, even without that, you still would have had a pretty bad quarter, probably negative from a delivery perspective. Solar deployed still absolutely fantastic. They're slowing down their supercharger growth, up just 14%. That used to grow closer to 30% annualized. Now, total revenues came in at $19.3 billion. Some things to highlight on here is your energy and storage business, $2.7 billion in revenue. Last quarter was actually over $3 billion. You've had numerous quarters over the past year where you had $3 billion. So $2.7 billion, a little bit of a slowdown on the cost side there. $2.5 billion. So just marginally profitable as it relates to that. Your gross profit off of $20 billion in revenue, just $3.1 billion. They continue to spend on R&D, $1.4 billion in the most recent quarter. Selling and marketing basically flat despite the negative sales. That's usually not a good sign. Income from operations, like I said, just fractionally profitable, $399 million. You've got a Palantir situation here where both companies are now earning more money on the interest of the cash sitting on the balance sheet. $400 million for Tesla. So when you factor in some interest expense and some taxes, the company making just $409 million of net income for a $700 billion car company, obviously that's, it's not good. Now, the company's plenty healthy from a financial perspective. You got plenty of cash, $37 billion of cash, balanced off by total liabilities. We're talking all liabilities combined. And some of these liabilities are like money held for deposits and those types of things. So it's not like a pure liability perspective, just $49 billion. So this company is in fine financial shape, and they could go through, they could go through a whole rough year and things aren't that bad. From an operating cash flow perspective, $2.2 billion you spend on capital expenditures. That was light in the quarter, 1.5. I tell you what, no matter what you say about Elon Musk, he does do a nice job controlling the CapEx, controlling the spend. He did it here. So you had light operating cash flow, but you had light capital expenditures. So it gave you, relatively decent financials. Technically, like I said, shares in the after hours are up 5%. Shares have basically been going sideways for a while. What is evolving, though, is potentially an uptrend for Tesla. You had a high back here. It's a very long-term uptrend, slow-moving uptrend. You're making a series of higher highs. It is being confirmed by a series of higher lows as well. You have a longer-term trend represented by this purple line as well. The stock very consistently goes sideways for many years and then gaps up on some kind of new product, whether it's Model Y or whatever it is, or just mass adoption of electric vehicles. The assumption, if you're a bull case argument on Tesla, is you're about to have a new surge higher based on robo-taxis going full autonomous, Optimus, all those types of things. If those things play out exactly how Elon says in the time frame, you probably will have a new leg higher on this stock as revenues and product lines and opportunities will massively expand over at this company based on that. And just if we have a continuation of this uptrend, you do have upside back into, it's crazy to say, probably back up into the $700 range on this one. The downside is probably retesting the lows that you made back in 2024. Back down in the 130s, 140s, those would probably be an interesting buying opportunity. But investors are pretty comfortable with this one. It's in a terrible position from a macro perspective. It's in a bad position from kind of a political standpoint and kind of a narrative standpoint. The valuation and the metrics are all terrible, but out of every company that I look at, it has one of the brightest futures on paper. This is like an upstart prospect where they haven't done anything and people are comparing them to Michael Jordan or Michael Phelps or whoever you want to pick. The robo-taxi business and the robot business at scale, if Tesla grabs even a good portion of that market, you are looking at $1 trillion market in probably both of those product lines. And so that is why you will continue to maintain an elevated valuation over at Tesla, despite the EDS, despite the macro heads, despite the people that can only open up a Finance 101 textbook and look at things like price to earnings. Your job is going to be replaced by AI. You have to analyze these stocks in different levels if you're going to compete in this next era. Tesla certainly trying to compete in the car business. I think they've proven that they can do that. Can they prove that they dominate autonomous vehicles and eventually robots as well? Well, the company has all the ingredients, and if you have patience to play it off and watch it play out, well, shares of Tesla probably going to go much higher in the next couple of years. Folks, that was Tesla. Hopefully you enjoyed today's video. As a reminder, if you like these earnings videos, I am posting them all now to the premium research. There is a link down below. I am posting videos and earnings analysis of all the companies you see here, and I'll be adding actually more to this list as the weeks go on. So if you like these earnings videos, the new place for it is my new website and my new research firm, Equity Empire. Hopefully you guys enjoyed today's video. Good luck with your investments.